Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you Wednesday, July the 15th. The year's 2020. Let's talk trading. Trading step by step. Step 7, lucky 7, right? Just so you know, these videos are for educational purposes only. Your results may differ from mine. Trading is extremely risky. You can lose all of your money. If you need trading, investment, or financial advice, seek the advice of an accredited financial professional. So, step 7. What I'm going to talk about is going to answer a question, or maybe partially answer a question posed to me by a viewer. And it's in regards to time and patience. He was asking that, hey, he wants to trade but not be tied to the screen. He's not interested in scalping. He's more interested in putting on a trade and maybe checking it maybe a couple times a day, maybe once an hour, but he doesn't want to be there on top of the trade like Walmall and I do. Well, the bad news is in my opinion, the foreign exchange really isn't the vehicle to do that. I think because if you're thinking of sitting in a trade for longer terms, you're really thinking more in terms of investing as opposed to trading. Now, of course, there's people, they call themselves swing traders, and that's definitely a possibility. And there's many people that do that. But the thing is that if you're going to do that, you're going to have to be real patient because there might be days, possibly weeks, where you're not even in a trade because there's no setup. And that's just how it works. I mean, for example, here, I brought up a monthly chart here, and this is the pound. And as you can see, a few months ago, this would have been an opportunity to go long right here. Here was an opportunity to go short. Maybe right here there's an opportunity to go short. And you can see right where we started here. I mean, what was the opportunity? We're looking at the wick zone. Price left this wick zone. So if you had taken that short out of the monthly wick zone and you come back later, you might have already been stopped out. Or even if you had such a small position size that this is your stop, you'd be like halfway there to your stop. So, in my opinion, it's not really something to aspire to in the world of Forex, that type of trading, unless you're willing to wait. So, for example, here might have been an opportunity to take a long trade, and you could have ridden that trade for, say, possibly 1, 2, 3, 4, 5 months. You could have ridden a short trade here, 1, 2, 3 months. But is that what you're willing to do? And we can, bring it down to a weekly basis. So once again, you can see some bottoms. You can see price coming up through the wick zone here. Just like here, we had price was in the upper wick zone. It came out. So you could be in this trade. And actually, there was a nice piece to be made. But what if you weren't around when this happened and you come back the next day or something and it's back up here? You left, 100 pips on the table. I don't know if you'd be happy about that. So when it comes to trading, it's like I mentioned in other videos. You have to find the instrument that works with the method, that works best with the method you're doing. So if you're scalping, you want something with a lot of volatility. And so if you're swing trading, what is it you want? You have to define that. And what is the length of your swing? Are we talking weeks? Are we talking days? I mean, if you look at the days, that's totally different. Because you can see here, price ran up, put in a high, and then you got that reversal, and then there was a pullback and down and a pullback and down, and then now it reversed back up. So, You can maybe look there and look at a holo trade or a wick zone trade here. The highest open right here for the on the daily chart. You look at the screen, this is like the highest open. And so you trade away from it. And then within this period, you see, well, here was the lowest open. So you trade away. So you can use those type of methods on a higher time frame. But then again, you have to run the frequency distributions and see if it's going to pay out. And once again, you might be trading a small position size because you might have, a 50 pip stop loss or a 100 pip stop loss. So you're going to have to trade a lot smaller. And I'm not really sure, once again, that I would be thinking in terms of Forex in those long term types of trades, especially small accounts. I mean, if you've got a big account, then you can take the swing and you can position yourself for carry trades where they pay you swap every day. But us small traders, we're not going to make much money off a swap. Let's just be real here. You might make $20, but for the most part, it's not going to happen. So I know that's probably not the answer you're looking for, but that was the question you asked, and that's my best answer. If you're really wanting to do that type of trading, I would definitely say the stock market would probably be a better place to put your money for the long term rather than the currency market, because the currencies have a lot more volatility, and world events can easily affect the currency, and overnight you could be wiped out. There could be, the biggest one was at one time I got lucky. I think I've shared this story before. I was short the Swiss franc, and the bank came out and they made a statement, and it tanked 500 pips, and I was short. Yeah, that was nice. But had I been long, I would have been wiped out and maybe then some. So, those are those black swan events. And that's one of the reasons why you might not want to invest in or to place your money in a currency pair for a long-term trade. Those the squiggly line traders, the trend traders, they say they do it, but do they really? I don't know. I mean, can you pick the bottom? Well, you can. You can say this is the relative, like right here. Well, here was a relative bottom right here. It came out of that wick zone. It's like, okay, let's see, maybe we go long. And then all of a sudden, look at that. There was a gap down. It probably went up. Maybe you take some money, and then all of a sudden, boom, it's down again. And this is over the weekend. And that's another thing. If you hold over the weekend, there could be some news in the world, and rather than it be a 10 pip gap, it could be a 200 pip gap. It could gap in your favor, it could gap against you. So you just really have to be careful. But of course, with stocks, there could be news that comes out and the company goes bankrupt, or the CEO is being hauled off to jail or something, and the stock tanks. You could have been like, what was it, WorldCom, one of those where it went to zero. I mean, it was trading at $30 one day and pennies the next, tenths of a penny. I mean, it was just crazy. Um, so if you want to trade, you got to make the time to trade. Even if it's only trading for 1 hour a day or a half hour, whatever it is, you need to be there fully present. In fact, this trader said that he understood my analogy about weightlifting. Well, if you lift weights, you don't just go to the gym once a week. You go there every day. Now, there are periods of rest. So maybe on Mondays and Thursdays, you do arms. And on, Tuesdays and Fridays, you do legs. Maybe on Wednesday, you do cardio. And maybe on Saturday, and every day you do stretching. But you space these things out. But you're doing something pretty much almost every day, unless it's just a total rest day. But with trading, you say, oh yeah, I'm going to do maybe a little bit here and put the trade on and walk away. Um, to me, it's just not a good idea. It really isn't. You can put your trade on, have your stop loss in place, have your take profit in place, and then you walk away. Either you win or you lose. And you can do that whether you're trading scalping, or if you're trading for these swing trades. I mean, it's like right now, you can say, I think the pound from this point is going to go down. So you go short, you put your stop loss, and maybe you put your take profit, and that's that. Then it's hands off, and you see if you guessed right. And it is a guess because nobody knows what the market's going to do. So it's a guess. And anybody that says it's not, they're not being 100% transparent and open and honest, in my opinion. I don't know what the market's going to do. I know based on statistics what it might do. For example, I know based on statistics that if we come down to, say, the M5 time frame, that chances are it's going to break out either to the upside or downside. If we look at H1, chances are this is going to range. It almost has to. And it usually does. So if I say come down here and I put 5 pips above, 5 pips below that hourly open, and the hourly range is like somewhere around 15, 16 pips or more. In fact, let's see, do I have that somewhere, or did I take that one away? I think I took that one off and put the other one on. But we can just look at the range, and once again we can see that it's going to be plus or minus the open 5 or more, at least one of them. So I hope that answers the question or questions about trading, time and patience. But you got to put the work in. And, if you're the type of trader that, over the weekend when the market's closed, you can plan out your trades and go, okay, if this happens, then I'm going to go long. If that happens, I'm going to go short. And you put your pendings order in ahead of time, and you can pretty much walk away. You already have your take profits and stop losses in place. And then you don't even have to check it. You can come back next week and see how well you did. You can check it every day or twice a day. But if you're actually going to actively trade, you need to be in front of your trading platform, paying attention to what's going on, and taking the trades. And that's it. That's it in a nutshell. And of course, when you're trading on each and every trade, it's coming. You have to have your risk management in place so you don't lose any one particular trade than you're willing to lose. And you have to have your brain management in place and your money management in place. It's really that simple. It really, really is. Now, I know you probably are wondering, well, is that really a trading step? Yes, it is a trading step. You have to decide how much time you're putting into trading, when you're going to trade, how much you're going to trade per session, how long you're going to sit there. You need to do that ahead of time. So if you planned on 2 hours, you're not there for 8. Once again, you have to do this ahead of time. So, fellow traders, I hope that helped. Hope you're having a profitable week. And just remember, it's not what you trade, it's how you trade it. Go out there and drain the banks. And if you haven't, please click subscribe, click like on the video, click the bell to be notified, and then click that share button and share the video all over the internet. This is TheRumpledOne signing out.